Ladies and gentlemen, good day and welcome to Garware Hi-Tech Films Limited Q4 FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Diwakar Pingle from ENY. Thank you, and over to you, Mr. Pingle.
Thank you, Neerav. Good afternoon, ladies and gentlemen. Welcome to the Q4 and financial year ending 2023 earnings call for the Garware Hi-Tech Films Limited. On behalf of the company, I would like to express our gratitude to each of you for joining the call today. To discuss the performance of the company and to answer the questions, we have with us from the company Mr. M.S. Atsul, Director Technical, Mr. Deepak Joshi, Director Sales and Marketing, Mr. Pradeep Mehta, the Chief Financial Officer, Mr. Sunil Wadikar, President Corporate Affairs and Finance, Mr. Hari Nair, Senior President Corporate Affairs and Finance, and Mr. Vinish Srivastava, Company Secretary. The investor presentation and the press release containing the company's financial approved results have been uploaded to the stock exchange and also accessible for download on our official company website. Before we begin, I would like to draw your attention to the fact that today's discussion may contain forward-looking statements that are subject to various risks, uncertainties, and other factors, some of which may be beyond management control. We kindly request that you bear in mind the uncertainties when interpreting such statements. Please note that this conference is being recorded. We will now start the session with an opening remarks from the management team. Afterwards, we'll open the floor for an interactive Q&A session. I would now like to invite Mr. Deepak Joshi, Director Sales and Marketing, to make his opening remarks. Over to you, Deepak.
Thank you, Diwakar, and thank you everyone for joining us today. And I would like to welcome to this earning call of Garware Hi-Tech Films Limited. On behalf of the entire team, I extend a warm greeting to everyone. We are delighted to have you all here as we share our business performance and provide valuable insights to our business operations. Before we delve into financial outcomes and our overall performance, I would like to give a concise overview of the company, its transformation, ensuring everybody gains a thorough understanding of our organization, especially those who may not be familiar with us. We have already uploaded the presentation, so you may refer to that, but I would just like to give a brief of the company. So, Garware Hi-Tech Films Limited is a high quality, high margin producing specialty films. They are mainly sun control films, paint protection films, shrinkable films, and low oligomer films. On all these products, we compete with global players. Even in the domestic market, we compete with global players whose products may be available in the market. But Garware is, this product portfolio is very unique if we compare with any of our peers in the domestic market. If we see our global reach, we are exporting now to 90 plus countries. And the geographical balance is quite even. I would say very balanced geographical presence with 33% being North America, almost 33% in India, and 20% in Asia, other than India, and rest 11% to Europe and other countries. If we compare the transition of our company from 2017 to 2023, in 2017, we were mainly polyester film manufacturing, like our most peers in industry. And in 23 now, we are highly value-added specialty film manufacturer. Our revenue from operation used to be 874 crore in 2017, which is now 1,438 crore. And our EBITDA margins were 9% in 17, which is now double to 18.7%. And similarly, all financial indicators show that the performance has grossly improved. Now, if we talk of GHFL brand dominance, See, Global is our primary brand, which is most reputed, one of the most reputed brands in sun control and PPF in America market and European market. We have 23 trademarks registered almost, many countries, and exporting, as I said, more than 90 plus countries we are exporting now. We are India's first company to produce PCR grade shrink films and APR, which is American Plastic Recycler certified for eco-friendly shrink films. We have been ranked 1 in Tintoff last year in USA. We are the second largest global capacity of sun control films, and since last 34 years, we have been winner of Top Exporters Award from Plex Council of India. In terms of our product portfolio, we have a very diversified product portfolio. In our consumer product division, we have automotive sun control films, paint protection films, safety films, and architectural films. In industrial product division, we have shrinkable films, we have low oligomer films for electrical and electronic applications, and we have release liners. We are widely used in various applications of similar products. And we have some commodity products which are called thermal lamination, plain film, packaging and lidding films, and metallized films. If we talk specifically about sun control films, our films are 99% harmful UV rays rejection. They have the property which does 99% of UV rejection. And in all global cases, we have been, all quality parameters, we have been ranked as a top producer of sun control films. There is currently, if we see the market is around $6.7 billion US in this financial year, and expected to grow at a CAGR of 5.8% to 11.1 billion in FY 2032. So there is a large scope of growth. There is an opportunity to grow. For that, Garware has already invested in a new lamination line along with paint protection films, and we have provisions to grow further in that line if the market permits us in that way, which we are seeing, and that will be decided in due course when the current line capacity goes full. The key drivers for sun control is we are a company which has a strength in terms of fully vertically integrated product portfolio. That means whatever product we produce, that's raw material and its components are produced in-house. Starting from petrochemicals of PTA and MEG, we produce our own PET resins. Then we produce our own metallized film, our own dyed films, and our own lamination. Similarly, these films are also used to produce all components of paint protection film. So we are fully vertically integrated. Our components are in-house manufactured, so to control the quality and consistency of the products. We have the second largest global capacity and third largest branded player in US and European markets. And recently we have expanded our capacity by 75%. So now sun control capacity is 1,800 lakh square feet in this year. Now coming to paint protection film. We are the only manufacturer of paint protection film in India, and probably only one of the few producers who have the dedicated paint protection line, which is a dedicated line. So our more than 70% of PPF is exported to global market. We are the sole producers in India, so there is a high dominance of PPF in terms of Garware's capability. The key drivers are, we have a 300 lakh square feet per annum capacity, which is currently being utilized at 50%, but that was for the last year, and we are seeing continuous growth in that business, so that is growing. If we see the penetration rate in USA, So it is 10%. So every 100 cars sold, there are 10 cars are wrapped with PPF. We see the same volume in China. The estimates are 12 to 13%, whereas in India it is less than 0.5%. So we clearly see a big potential for growth in Indian market, and we are taking steps to grow to that in Indian market as well. So currently, in order to increase the sales of paint protection film in India, we had a unique concept called Garware Application Studio. We had an aim to open 200 studios in 2 years. So we have already done 65 plus studios in India, and we are on the course to meet the target of 200 in 2 years' time. And we have currently OEM brands like dealers who sell our product directly at their dealership. We have 100 as of now, and in 2 years we have the target to reach to 500 such players. Apart from that, we are doing continuous training to create more market for PPF. Just as a note to everyone that PPF was insignificant before Garware entered into this market. With all the efforts, we have created a market for paint protection film. We are doing regular trainings for applicators to learn this application business, which was a key constraint to develop this market. Till date, we have trained more than 500 applicators, and it is going on further. We are creating a tinting and applicator community where all of these people are joined under one roof and promoting Garware brands. Now on shrink films, Garware is having a dedicated line for shrink films, and we also have further capacity where in a fungible line to produce more of that films. We have seen a big jump in last year in terms of with our efforts to grow the shrink film in Indian market, because PET shrink film is recyclable material as compared to PVC. So many of the PVC consumers are now shifting to PETG. We have converted some of the big names to grow the market, and we have been successful in doing so. Currently, Garware occupies, or Garware caters to 60% of such market, catering to almost all large converters in India. And in order to go for recyclable, in order to increase the recyclability of the product, we have developed solid white with a pearl float, which is a floatable film while recycling. We have developed American plastic recycle certified product, and as I said, post-consumer recycle waste on shrink film, we are the only one. Now, key drivers for shrink film. The market was estimate from Allied Market Research was $4.7 billion global market, which is expected to go to 8 billion with a CAGR of 5.4%. So again, we see a lot of potential, and Garware's products are known for its quality, its consistency, and end-to-end control on quality by making all components, that is resin, for these films. And another key growth driver is conversion of PVC to PETG. Now coming back to the marketing, Garware has its global presence in more than 90 countries. It has its sales offices and subsidiaries in USA, UK, apart from India. It has 2 manufacturing locations, and its sales representation in China, Middle East, Far East, Russia, and South America. Practically all over the global market has been covered by our sales team. We have 5,000 plus tinters across the globe who apply our product and promote Garware sun control and PPF. Now, manufacturing footprint, as I said, we have 2 fully vertically integrated manufacturing locations. which makes polyester chips plant for polyester lines, extrusion coating lines, thermal line, metallizers, sun control film plants for automobile, architectural, safety films, and paint protection films. So we have a robust network of manufacturing facilities, and full details have been given on the presentation. In terms of the company, Garware High-Tech Films Limited is committed for innovation-driven R&D. We have recently, in March 23, we have won Japanese Institute of Plant Management Award for TPM Excellence. We have 50 plus dedicated R&D team members. We have 23 registered trademarks in 168 branches. And as Garware is committed for high R&D, we are working for many new products, which includes we already produce PPF. We have recently developed a matte PPF, then recently developed the shrinkable pearl float, that is floatable shrink film. Then we recently launched decorative and designer films, and these are some of the and some windshield protection films. So which are the examples of innovation by our R&D team. In terms of sustainability, we have taken a target of 50% reduction of absolute emission by 2030. We have targets of 3 to 5% of fuel consumption reduction in carbon emission on our products. Again, as a committed towards sustainability, we are producing 30% PCR content of shrink films, APR certified films, pearl float, and so on and so forth. And in terms of our new initiatives, these are just a highlight of the presentation. We have appointed our Director Technical, Mr. M.S. Atsul, who is an alumni of UDCD Mumbai, and he has more than 40 years of experience in plastic and polymers engineering. And we have already, as I discussed, new product launches have been done. Then Garware Application Studios 60 plus has already been done. We have engaged Boston Consulting Group, BCG, for sales and branding services to drive the CPD business, that is sun control and PPF business in domestic market. And we have started initiative to reduce cost and increasing productivity through major initiatives. And in terms of PPF, we have tied up with 2 major car manufacturers and in advanced talks of some more. With this, I would like to invite Mr. Pradeep Mehta, the CFO, to take through the financial highlights of the company. Thank you very much. Over to you, Pradeep.
Yeah, thank you, Deepak. Good afternoon, ladies and gentlemen. I am pleased to inform that our company is in a strong financial position, which we are dedicated to maintaining for the future growth opportunities. Regarding our annual performance for FY23, we recorded a revenue of INR 1,438 crores, which is an increase of 10.4% year on year. Furthermore, our EBITDA stood at INR 269 crore, and the EBITDA margin stands at 18.7% for FY23. PAT stood at INR 166 crore, and while the PAT margin is 11.6%. Coming to the quarterly performance of Q4 FY23, we recorded a revenue of INR 349 crore. The EBITDA stood at INR 70 crore, and the EBITDA margin stood at 20.2% for the quarter. The PAT stood at INR 43 crore, and the PAT margin stood at 12.3%. So if you look from FY18 to FY23, our revenue has increased at a CAGR of around 12%, but at the same time, our PAT margin has improved by a CAGR of 38%. The commissioning of 2 new lines, that is one PPF and a new lamination line, now have started contributing share in the revenue of FY23. We are experiencing improved product mix this capacity addition and healthy utilization towards growth trajectory. With the upcoming commencement of production at our new lamination line facility and the increasing traction of our margin accretive valued product, we are confident in our favorable growth prospects. Over the year, we have made significant progress in reducing our total debt, and we are currently stand at around 140 crores as on 31st March 23. Furthermore, we have no plan for additional debt-funded capital expenditure in the near future, indicating our responsible approach for managing financial risks. We will strive for superior and sustainable margins, and our financial health is improving with healthy cash flow and negative net debt and impressive low correction day of only 8 days for FY23. This reflects our strong working capital management, the advance payment from customers, and improved inventory management. So we will continue to focus on enhancing our balance sheet and nurturing our financial position to seize some future opportunities. We appreciate the support of our stakeholders and look forward to delivering even greater value in the years ahead. Thank you. Now we open the floor for Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask the question. The first question is from the line of Rahul Gupta from AlphaStreet Investments. Please go ahead.
Yeah, hi. Congratulations on the good set of numbers. You have performed better than the peers with the impressive quarter-on-quarter growth and a decent year-on-year performance. Could you please elaborate on the key factors or strategies that has contributed to this success?
Yeah, thank you, and thanks a lot for your appreciation. See, on the performance, why we have been different is our focus on consumer products, which are key for us, which is sun control and paint protection films. And Garware's quality, consistency, and control on its product components is the key for success. And we are focused on anything which goes as a commodity, which are filler for us. The real company, Garware, is always focused on specialty product, which is sun control and PPF. So that is actually the key factor for our performance in over the years. And I have already shared that since 2017, when the company decided a strategic move towards the specialty products, and we have invested in that direction. So that was the key for our success. And in the presentation, I have already showed that the efforts which we are doing in terms of creating Garware application studios, in terms of creating tinters and applicators community, and we are trying to have data of the influencers in consumer products to have higher sales for the company in the specialty and high margin products. I hope I answered your question.
Yes, sir. Thank you. And my second question is, sir, with PPF being a focused product for the company, what is the management outlook for the paint protection film markets in the upcoming years? Could you please elaborate on the growth projections and the strategies in place to capture a larger market share in this segment?
Yeah. PPF volumes were non-existent in before 2 years. So we have created a market by campaigns on digital media, special drives for car dealers, training for applicators to create a mass movement. So far we have trained, as I said, around 500 applicators who actively promoting Garware brands in the market. Now, in gas efforts, I have already mentioned that. So, I mean, largely, I hope I answered the question in my presentation as well. But these are the efforts which we have done in the domestic market. If we talk on the globally, we have been able to convert some big players to buy the material from us. And the name of global brand has been there for last 20 years, and it has been really performing well. So, the products which are, very unique in PPF, which is the width of the product, which normally is 60 inches, but there are requirements for the bigger width in the market like America, where 72 inches are required. So that also Garware produces. And we have recently started supplying the variant of matte PPF. So with all our ability to produce high quality products and the products which are complete basket for PPF is supplied by Garware. So that's all for myself.
Okay. Thank you. Thank you. That is all from my side.
Thank you very much.
Thank you. Next question is from the line of Mihir Desai from Pendulum Investment Services. Please go ahead.
Thank you for the opportunity. So firstly, I want to ask you on the demand front. So how is the demand for sun control window film in domestic as well as international markets? And also if you can provide some insight into how company is planning for expanding its sun control film business. Also, sir, what are the key growth drivers and potential market opportunities that company is currently targeting?
Yeah. See, Garware, in terms of sun control, we have two segments, which is one is automotive, another one is architectural. Garware has been very major player on automotive segment, and the growth has been quite good in past few in the past. But if we see since last 2 years, this is kind of stagnant growth because of high interest rates and kind of recessionary trends in main markets like USA. And last year, after the geopolitical tension between Russia and Ukraine, the European market is also little bit down. So in a way, like the market is stagnant. The volumes are not growing in our automotive segment. So we expect once this tension goes off, we will perform really high on that. But the other segment, architectural segment, we have launched series of initiatives where we are developing many products in that segment to create an impact. In fact, some of the products like designer film, decorative film, and some of the products which are in making, which I cannot name now. So with R&D and new product developments, we are working towards the goal of achieving that volume in architectural segment also. And once the market gets correction in Europe and USA, we'll definitely see good jump in sun control automotive films as well. So the key to that is our consistent quality and the performance. And at the same time, R&D is helping to develop new products to go in those markets.
Sure. So one more follow-up question on this, like besides the sun control films and protection films, is the company targeting any specific areas of interest or, some another market segments or products that company is currently exploring? And also, if you can provide some insights on company strategy for any existing or new product and capturing a new growth opportunities, which is, beyond the SCF and PPF.
Yeah, sure. See, again, we have recently done these two expansions on PPF and sun control. And our first target is to fill those lines, but simultaneously our R&D and new products are working on many new fronts. Some of them have already been achieved, like pearl float and matte, but other than that, there are designer films, decorative films, some shield products, and again, there are 3-4 products in making, which we will announce in due course. But yes, we are continuously working, our R&D and new product development team along with the market research team always work on those products. In fact, if I go little further on that, that strength of Garware is always in-house manufacturing of all the components. While we have been doing good on paint protection film in advanced markets like America, many producers who got attracted towards the components of that films like liners, protection films and all. So we have started supplying such products which are manufactured by Garware for our own in-house consumption. We have also started selling them to the market because they go to the segment other than these products like PPF and window films.
Sure. So lastly, I wanted to ask you that if you can throw some light on, company's growth profile or growth strategy for next 3 to 5 years, which as an investor will help us, sir.
Yeah, we have been continuously growing in terms of top line and bottom line. So our next target is to fill PPF line and sun control line. So that means if we calculate the capacity with those new lines, it would be somewhere between top line between 2,000 to 2,500 crore, and we'll try to achieve that in a short span of time.
Sure, sir. If I have further questions, I'll join the queue.
Thank you very much.
Thank you.
Thank you. Next question is from the line of Sanjay Shah from KSA Securities Private Limited. Please go ahead.
Good afternoon, gentlemen, and thanks for opportunity. First of all, congratulating on good numbers, coming to Concall and giving us some information is really helpful, sir. Presentation is good, sir, and it's really very informative, which is really helpful to us. So my question was just to get some understanding about our sales strategy, outside India, and how are we able to compete global majors? And do we sell only through distributors, or we have some direct sales also? And are these orders long-term orders or custom-based, monthly or regular order base?
Yeah. Okay. Your question is specifically to export market, right?
Right.
Yeah. So we have, as you said, we have a very wide distributor network all over the world. Especially, we cover all 52 states in USA, which is our primary market. So other than there are some direct customers also whose size is significantly bigger than a normal customer. So we cater them directly, right? And we market our products through various initiatives. Like as I said, we work a lot on the brand recognition, brand recall. So Global, with all the efforts, is a very well known. So if you go to window film magazines, PPF magazines, and all such forums, so you will see Global as a primary brand there. And then we participate in shows like Tintop, SEMA, which is the biggest show there, and plus Window Magazine and PPF Magazine, everywhere we are there. And once the brand recognition is there, distributor network is there, so we get many outside efforts from our team who are on the ground to take these efforts to the next level. So we have all strategies in place in terms of distributorship, in terms of sales and marketing promotions, in terms of digital media and participation in the shows.
That's good. So the order is a long-term order we get from OEs, or it is a regular order placed by them? And
there are some, not all orders are a long-term, but there are many key customers are ours. Like I mean, they give a regular order plus a long-term commitment to us, because there are many companies in the world who do not manufacture, who only sell the product, market the product under their brand name, right? So it's a mutual dependence on each other. Like they cannot run away overnight to someone else to buy this product. Similarly, we also don't replace our product. So these are commitments to each other for a long term as well. It is not 100%, but it is not. It is more than 50%, I can say, where the commitments are on long term basis.
So my second question was regarding our competitors. Will it be possible to name few of our competitors, especially in paint protection, film, and other verticals? And what is the price difference between us and their product?
Yeah. See, I will answer it this way. Like if you see, if I don't know legally, but we all know the players in the markets are. Can I name the question? So I'm asking to our company secretary. Name the competitor? No. Okay. So but you can search them. There are competitors who are big companies that they have a segment in sun control film and paint protection films. I would like to answer it this way, that even they manufacture their products. They buy the components, 5 different components from different places, whereas Garware makes almost all of them. So in terms of efficiency, we are at a very high rate of efficiency, production efficiency, quality efficiency, and in terms of, I would say, making the product commercially viable. We are very new entrant into the market. That means from last 3 years, we have been in the market and achieved the quality which these players have already done in last 20 years. Top 3 players, they were there for last 20 years. So we have done that work in last 3 years. So to create the market, and because of our efficiency in manufacturing, we gave some introductory prices, but still our margins are good and they are growing. So I can answer in this way.
Yeah, appreciate. But what could be the benchmark sales price difference between them and us, without naming no need to quote any name? Somebody, for example, there is a big competitor in India who gets 100 rolls of PPF and sells into the market, whereas Garware does 15 times of that. So what happens is, being a player in domestic market, we have done those kind of efforts to keep a gap to push through our volume, and the sales, in terms of sales, we sell 10 times more volume than that person. So there is a gap, and we have intentionally kept to grow our market share. And if you ask the same question in the international market, we are at par with everyone. If you talk of that same supplier in America, same supplier like ours in America, almost same. There will be hardly any 4-5% difference if it is there.
Thank you. Sanjay, sorry to interrupt you. I'll ask you to join the queue again for a follow-up question. A request to all the participants, strictly, please restrict to 2 questions per participant and join the queue back for a follow-up question. The next question is from the line of Vandit Shah from Abacus Asset. Please go ahead.
Hello, sir. Thanks for the opportunity. 2 questions. Can you give us a light on current order book position and our future outlook, and are the margins sustainable?
So this is for a specific product or hello?
Yes, sir.
Yeah, it is. Your question is for a specific product?
No, sir. Overall, your current order book position.
So overall, we have like many product segments. So I can say on like starting from PPF, which is the newest product, we have a very good order book. So that's why we are expecting the line to be fully utilized within this year or by end of the year. And on sun control film, these orders are, there are commitments and contracts like I was talking. So every month these repeat orders come. So they are usually a month-long orders, and before the month ends, we get the orders. So there are contracts, and we have a quite fair idea of order book for the whole year. Depending on like a little bit on seasonality, but yes, we know there are projections and forecasts which are running through for the whole year for sun control as well as PPF. If you talk of the products like industrial product division, so there are we have like shrink film orders for going for 2 months, 2.5 months orders on hand. Whereas all other products, they come on a same monthly basis, where we have contracts with our customers, and they keep on repeating every month and for the next month orders.
Okay, sir. And are the margins sustainable? The current margin?
Yes. I mean, the stress of Garware, I think many people are asking the same questions because seeing the kind of results which our peers are posting. So I would again say very, strategically and categorically, I can say that our margins are intact, our product portfolio is very different, and we are a high quality specialty product and should not be compared on that basis, like the market ups and downs, because our product prices do not change unless there is a drastic change on the raw material in specialty products, which is because all components are produced by us. So we know like how much time it is taken to change the raw material cost on that. Whereas there are some products where the prices change, which we pass on. So it is sustainable. To answer your question, yes, it is sustainable. Margins are sustainable.
Thank you. Vandit, I'll request you to come back in the queue for a follow-up question. Next question is from the line of Sudhir Beda from Bright Time Private Limited. Please go ahead.
Yeah, good afternoon, sir, and hearty congratulations on a good set of numbers in the given circumstances.
Thank you.
Sir, I have two questions. So, as you said in the previous question, that your turnover in the existing capacity would go to like 2,000, 2,500. And now, I think most of the capacity has been put in the place. So, can we expect the 2,000 crores of figure in FY24 itself, or it will take some time? That is a question number one.
Okay. So I would not like to put forward that way, but I can tell you that there will be a growth like we have seen in the past. It might be little more or it might be little less, but the growth pattern will continue to that direction. And in 1 or 2 years' time, definitely we'll achieve that.
Great.
So, FY24 guidelines I cannot give that way, because we all know the world is suffering for so many things. In fact, we have seen the kind of recessionary trends from Europe and all. But despite all those things, I'm confident that we are moving in the right direction and growing.
Great. And sir, my second question is pertaining to property at Parla. What is the status and when this will be put for the sale?
Yeah, I think Hari Nair would be better if he can comment on that.
What we are doing is we are trying to explore multiple options to monetize this particular asset. Now, this is a decently valued asset. Currently, we have some offers, but it doesn't capture the full value which ought to come to the company. So we are waiting for the right option to come to us. And also there are certain what we call documentary work which is pending and those kind of things which we need to complete so that the value add can be a little better than what it is today. Yeah. So it's not a right time. We cannot it's not a right time to sell or do any incremental work on the property. Maybe, but it's we as a management.
Process is on, that we can say.
Yeah. Sorry?
Process is on, that much you can say?
Sure. See, the company is cognizant of the fact that this is a valuable asset and it's something which we need to monetize, and if we can add value to it by doing certain things regulatorily, or we are doing it.
Great. Thanks for the opportunity and best of luck.
Thank you.
Thank you. Next question is from the line of Rahil Shah from Crown Capital Partners. Please go ahead.
Hello, sir. Good afternoon. And firstly, thank you for conducting this call. We've been looking forward to it. And congratulations on good numbers.
Thank you.
Yes. So a couple of months back, I heard there was some issues like you mentioned with the US market. there was some destocking going on. So has it now returned to normalcy? And so what is the scenario there in the US market?
Yeah. In the US market, yes, it is now almost the correction has been completed. It is, I mean, I can say still only 10% remaining. But in the last year, if we all remember that there was a lot of supply chain issues, and because owing to COVID to some countries, some of the manufacturers were down, not producing. So there were a lot of, expected order flow. I mean, order book was quite heavy, and people were not able to cater, including us also. So that time there was a lot of buying happened, and it continued for many months. And at the same time, the supply chain went really at its worst by not supplying material to westward, including Europe and America. So leading to a very high inventory situation in those countries, which has been corrected in I would say Q4, and to some extent it will complete in this quarter. So it has not 100% been completed, but I can say that during this quarter it will be over.
Okay, so benefits should like come in FY24, and things are looking good there.
Yes.
What percentage of exports are to US out of total?
Yeah, we have shared that in the presentation. It's around 30%, but 30% to be precise. Yeah.
Right. Okay. And your view, and what's the raw material scenario right now?
Again, you are talking of raw material for entire company or particular products?
Yes. Overall, in general, like
overall, this raw material is on lower side. If I can say it all, because we are vertically integrated, so I would say backward integrated from sun control, PPF towards everything. I mean, till petrochemicals. So petrochemical prices are dependent on naphtha and ultimately on crude oil, which is we believe is at a lower level right now, and it should remain in that territory for some time. So the question is on there are other raw materials also other than these petrochemicals, but they all are at a lower level at this moment.
Okay. Yes, that's it for now. Thank you, and I'll get back into you. All the best.
Thank you very much. Thank you.
Thank you. Next question is from the line of Kashyap Karthik from Table Tree Capital. Please go ahead.
Thank you. Good afternoon, sir. So my question, two questions. First one on the PPF side. So PPF, we are around 70-75 crore for this year. Even last year, based on the last year's Concall, it was around the same number. So A, have we not grown in PPF in this year? B, how much of that is domestic and how much of that is export? And Expel and Avery Dennison, Lumar, everybody are talking about an explosion in the PPF market in terms of the demand scenarios because of multiple car accessories. And we're still probably 70-75 crore with 50%, which essentially means for 100% utilization it will be about 150-170 crore. So I'm just a little surprised that management is not very gung-ho on PPF in terms of growing fairly quickly on a much lower base. So if you can just tell me the export and domestic split. Domestic, you've got a great brand name. You're known for value for money. We've done a market research. So just trying to understand your thoughts around the PPF market, please, both in the export side and the domestic side.
Yeah. So first question, as you said, last year when we said there were, the capacity was very low utilized. At that time, the previous year, I would say, FY21. So that time, as we said, this is a fungible, asset where we were producing some sun control components there to keep it utilized. That's why we are not seeing any growth as compared to 21 to 23. However, I can assure you that the volumes of PPF the PPF line from PPF has grown quite a bit, and especially in Q4. And right now the trends and the order book and everything shows a robust growth. So management, I mean, I won't use the word gung-ho, but very, very positive on that. And our investment is paying right way for us. In terms of domestic market, as I said, I mean, the numbers are outstanding. If we compare 2 years prior versus now, I can say there is a 10 times growth. But since the base was low, that's why we are not very, because we are not promoting that great deal. Our aim is to go. I mean, if I say in terms of plant capacity, so 25% is the target to be in the domestic market, 25-30, and 70% is the export market. And we might think of further expansion if everything goes well in this direction, and that will come out during this financial year on.
Got it, sir. Got it. And a two-part question. One, are the PPF margins double of the sun control films? I mean, I don't want exact margins, but are they 2x sun control films, or the margins are very similar from a EBITDA perspective? And two, there's a lot of stuff around processing charges in the annual report that last time as well, and I'm sure it will come this time as well. So any commentary around the processing charges with Garware Industries?
Yeah. See, again, so margins are in the same range because this is a very high value product. So, I mean, it cannot be double that, but it's almost the same. What was your second question? Sorry, commentary about?
So commentary around, I mean, last year's annual report spoke about processing charges to Garware Industries, about 30-35 crore. And this year also it looks very similar. So is there a structured arrangement between us and Garware Industries for processing?
Hari, would you like to take that?
Yeah, there is, see, this particular processing of window films, there is a particular arrangement with industries since couple of, like almost nearly a decade. So that continues. There is no change vis-a-vis that particular transaction.
Got it. So it's going to continue. It's going to be a recurring charge every year for the next foreseeable future.
Yeah, sure. And also, see, this particular PPF, when we said that the total capacity, if you put it, translate into rupee crore, it comes to a 300 to 400 range. I put a number to it depending on where the value lies. But that is total volume if you get the value in order. It's not 150 crore, it's more than that.
Oh, no, sir. The reason why I said 150 is 50% utilization as said in the presentation. So, and if you work out the numbers, it's coming to about 70-75 crore in PPF for this year. So if 50% utilization is 75 crore, then 100% utilization, my understanding was 150 crore.
So if you see the note also, there is an asterisk. We have used that particular also for clearing the backlog. See, we had a lot of backlog of window film processing which has to be done. So we use the same machine to complete that backlog, for which reason the capacity utilization has been factored based on that particular, what you call, window film processing also. But now we use PPF machine purely for PPF purposes. And the capacity, final capacity 300 LSS will give us about 300 to 400 crore. So that's the number. You can take that number.
Thank you. Kashyap, I'll request you on the queue again for a follow-up question. Next question is from the line of Harsh Mulchandani from Chris Portfolio. Please go ahead.
Hi, congratulations on the set of numbers. Wanted to understand the current segment-wise split, like for sun control, PPF, shrink films, and the other set of films. So, because I could find only 2-3 segments in the PPT. It's my first question, and I'll come to the second.
You want to, let me just grasp your question. You're basically trying to split the broader number. We normally don't give, but just can you explain your question, please?
Yes. Want to understand out of the total revenue, what revenue came from sun control, shrink, films, PPF. So want to get that split. of all products?
Sure. So see, from a CPD now we will put together Sun Control as well as PPF. It's almost like 51-52% comes from Sun Control and PPF. And of that, if you see, then we and of the commodity now, roughly say 50-50. Sun Control plus PPF is 50%, and 50% comes from the IPD, the industrial products. Of industrial products, approximately half of that comes from special and shrink products. So this is the broader mix. If you look at our presentation, it's there. Broadly, it is given there. And commodity gives us about 20-odd%. As we grow our CPD business, which is Sun Control, shrink, as well as our IPD, this percentage will keep on changing. You see, over a period of time, from 40-odd%, 50-odd%, it has come to almost 80-odd%. So this will keep. There will be a little bit change in the mix and going forward, and we are not increasing capacity of the commodity business per se in the company. So the mix will continue to be skewed towards CPD and PPF business.
Yeah, just one comment on that. As Hari explained that CPD is 50%, then other value-added products are roughly 30%. So 80% comes from value-added products. And with the capacity, more capacity utilization of PPF and then Sun Control, this number is further going to increase on value-added. Because all the expansions, all the drive to grow the business is towards that segment only.
Got it. Perfect. Okay. And second is the new lines which we started, lamination and for PPF. What is the current utilization? And say, for example, we go for a new capacity addition. So what is the time to add that line from drawing board to actual installation? Just wanted to get that timeline also.
Yeah, PPF we have already discussed, the current utilization was, which we declared was like 50 to 60%. So looking forward, I mean, we have a target to complete full utilization during this financial, by end of this financial year. So we are on track in terms of PPF. Whereas on Sun Control, it started in December 22 only, so it's 4-5 months. So it takes, and the market scenario is still not what it used to be. So it is at the rate of around 20% currently. But this will grow, continue. I mean, PPF we are on track. On Sun Control, as per the current situation, it is around 20%. But it will grow very fast. And in case of any better correction comes from Europe and USA, then it will quickly jump into utilization. And in terms of new addition to the capacities, see, we always look for, our direction is for these kind of products, consumer products for future. So we have made provisions of space, building, utilities and everything for the further expansion. So as soon as we trigger that for the new line, so within a year that will be installed, because groundwork and everything is ready.
Got it. So should we plan for PPF, assuming we get full utilization this year? So for next year we can have some lines being planned in this quarter and at full capacity, so that we can go beyond 2,500 crores of revenue.
Yeah, we are actually certainly looking in that direction, but the decision has not yet been made. We are, in discussion in line what you are asking. So the direction is quite clear, but we are just seeing some factors, because we also want to be sure to put the capex which will give us good returns. So we are evaluating that. And we have envisaged that kind of growth. That's why our direction in last 3-4 years has been towards these kind of consumer products. And that's why we have built, the basic infrastructure to go for expansion in a quick, span of time.
Thank you. Harsh, I'll request you on the queue again for a follow-up question. The next question is from Sri Ranjana from Ratnatra Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. And firstly, really appreciate the detailed presentation. So first question is.
Ma'am, your voice is not clear. Can I request you to speak through the handset?
Yeah. Yeah. Is it better now?
Yes.
Yeah. So my first question is on the for this particular quarter, sir. We saved about 15 crores on the other expenses side, because of which we could control the drop at the EBITDA level. So I just wanted to understand how what led to those savings. That would be my first question.
See, some of the savings is on account of what you call cost measures, as well as on account of volume change, as well as some includes freight also. So freight prices have come down. So although it's a mix of it, not one particular factor, and primarily these are the factors which has led to the reduction.
Okay, so should we assume that will continue, this kind of in terms of expenses as a percentage of sales, the OPEX?
The OPEX will continue. See, also if you look at one of the slides which we have given, we are also trying to genuinely reduce the fixed cost also, because ultimately we'll have to keep control over cost also. So we are in an exercise to trying to lower the ratio. Now, at what time frame we will be able to do, we will have to see, because there are multiple issues we need to navigate, but that's something which we are trying to do. So ratio will be, you can assume this number, but our idea internally is also to look at little more closely and trying to bring it little lower, if not much, little lower than the existing number.
Okay. So my second question is, we have two subsidiaries in US and UK, right? So do we also keep inventory there in order to sell in those markets? And if yes, what would be the typical inventory holding period?
Yeah, we do not keep anything in UK subsidiary. We keep at USA because that market is quite big for us, and the orders we need to cater, we need to compete with our peers there. So the typical period is 30 days. I mean, almost 30 days sales volume usually we keep there.
Okay, and has it increased lately, or is it the same? The inventory cycle?
Some patterns when there was, inventory last year when the supply chain was slow and material then suddenly picked up. So that was 2-3 months period where it went a little high, but it has been, as somebody else asked the same question. So it has been mostly corrected, and slight correction is happening. Now we are seeing that correction, so it will be complete now.
Okay, understood. So just one more question, if I can ask. So regarding the demand side, since we have exposure to the US and UK market, and exports in US and UK, there is some weakness. So are you also seeing that kind of weakness? Yeah.
Yeah. So if your question is, are we also seeing demand slow down towards US and Europe, right?
Correct, yes.
Yeah, actually, I would say on sun control side, yes, we have seen that, because we also, there were a lot of stagnant growth in US because of low car sales last year. And then because of high inflation, there was a trend, lower trend for sun control films. But at the same time, the similar volumes have been picked up in PPF. So PPF has increased quite substantially, whereas there is a slight drop on sun control side.
Okay, understood, sir. Thank you.
Thank you.
Thank you.
Thank you. Next question is from the line of Dwanil Desai from Total Capital. Please go ahead.
Hi, good afternoon, everyone. So my first question is on sun control. So, you mentioned that we are primarily focused on the automotive side and we are working on the architectural side. So if you can give us some sense as to our total revenue of 600 something crore, what is the automotive, and the distribution channel for architecture Sun Control would be very different. So even though we are introducing new product, how do we want to scale it up, and will it be kind of help us take that Sun Control to grow at 20% kind of a number going forward? How do you guys look at it?
Yeah, actually, if you see the nature of both films in window films in architectural as well as automotive is different. So, and the distribution network is also quite different. It's not that same distributors do not do, but there are people who are expert in, they are especially focused on architectural segment. So to answer your question, like for us, we have appointed new distributors in USA who are actually working mainly on architectural segment. So if I say the films which we are talking now, architecture, there's designer films, decorative films, and some specialty films in architectural segment. So we have hired a distributor who have got that kind of penetration into the market. That is one way. And then we are also creating that kind of similar, value or market creation in European market as well, where we have hired some new talent who have been working in similar field and similar products. So that is number two. So hiring the new distributors in that territory, appointing them, and then hiring new talent. And also the focus since last 1 year have been like the products which are especially made for Europe market, which is mainly after this energy crisis, there has been a big pickup on architectural segment. So that opportunity also been tapped, and some of the products which I said we are developing are in that segment.
Okay, so the current,
yeah, sorry.
No, so out of current revenue on Sun Control, is it safe to assume that large part is only automobile and architecture is a very small number?
Yeah, till date it is roughly 80-20, 80% of automotive and 20% of architectural. I will have to also look into that, but our target is to at least go 30-35% on architectural segment and balance on automotive. Automotive, so that having said that, automotive won't drop, it will continue to increase after this, whatever the short-term issues are going on. But at the same time, architectural segment, we have done, as I said, the efforts have been put, new product, new territories, new distributors, and new talent in sales. So this is the strategy to grow the architectural segment.
And my second question is on PPF. So, we have mentioned that, global market is around $300 million. And, I assume that US will be a large part of that, and we have an ambition to take 8 to 10% market share. So, is it like we are looking at a $10-12 million kind of a revenue in that? And when we say 8 to 10% market share, and to tie this in, if you look at companies like Expel or other peers, they want 20-25%, this year. So we have kind of, our numbers on growth side have been soft. So do you think that going forward we will catch up and grow at, much faster rate to get this market share?
Yes, because the basic difference is, as I said, these players are there for last 15-20 years, where we have started our drive for last 3 years. But the basic difference between them and us is like we are a strong manufacturing company having our own R&D, our own components. So we are already catching up. So definitely, as I said, the target, once again saying to complete full utilization by end of this year. So that means, our volumes will be quite different and quite strong going forward on PPF.
Okay. And can I ask one more question?
Sir, sorry to interrupt you. I'll request you to join the queue again.
Thank you.
Next follow-up question is from the line of Kashyap Karthik from Table Tree Capital. Please go ahead.
Yeah, thank you so much. Sir, quick question. The brand, global brand Garware, everything is owned by the listed entity, right? No other entity owns it?
Yes, it's owned by Garware High-Tech Films Limited.
Got it. So global Garware and anything related to Garware High-Tech Films is owned by Garware High-Tech Films, essentially, right?
Yes.
No other private company. Got it. Got it. Thank you, sir.
Thank you. Next question is from the line of Anshuman Sharma from Control Print Limited. Please go ahead.
Hello, sir. First of all, thanks for the opportunity. I have only one question. I want to know that, like, as we know, our company has huge freehold land. So is there any plans to monetize it?
So see, there are two, two sorts of land. One is this Villaparla property where we have corporate office, which I have discussed about just few minutes back. Then we have some property in Nashik where we had some factory which we are trying to monetize. So from a monetization perspective, we will take up Nashik plot first, and then of course look at Bombay also closely. Anyway, we are working on Bombay. And in respect of Aurangabad, we have two freehold properties. Both we are utilizing for manufacturing purposes. So as of now, we will continue with the manufacturing process. So monetization part, we'll have to look at Nashik as well as Mumbai, Parla area.
So, sir, by when we can expect this monetization complete?
In Nashik, Mr. Deepak Joshi is working on it. Now, see, you know, when you go and talk to the market players, there are multiple prices which we do get. Now, it has to come to the range where we believe it is market rate. We don't want to, there is no exigency in the company that we need to sell immediately or something. So we want the right price to come at a right. Nashik is clear sale. There is no development, no. It's a clean. We can just sell it off. We are waiting for a good price to come. We believe we have kept a stiff price. If we get the price, we will sell it off. Bombay, there are little more angles to look at. So maybe it will. Both are of similar value for that matter. It's not that Nashik is a smaller value property. Both are of similar value property. And also we don't want to short sell anything. Everything has to come to the company, proper value, everything has to come. It has to be.
Right.
So we are working on it.
Okay, sir. Thanks.
Thank you. Next question is from the line of Naitik Mohta from Sequent Investments. Please go ahead.
Sir, thank you for the opportunity and congratulations on the good set of numbers. Sir, I just want some clearance regarding the PPF line that we had set up. So I have an understanding that the peak revenue capacity of this line was somewhere around 300 crores. And in your June 2022 quarter Concall itself, you had mentioned that we had generated somewhere around 80 to 100 crores from the PPF segment. So at 50% capacity, I believe there has been no growth since the last 1 year. So is my understanding correct?
No, actually, we explained, even Hari also explained some time back that last year we had a lot of backlogs of sun control films because of there were issues in the market owing to supply chain situation and many producers going out of market. So that time we used, this line is a fungible line. So we used some components of sun control film to clear the backlog. But so that's why that utilization was high, but that was not 100% PPF line for PPF product. Whereas if you compare now this year and going forward, now everything is in that line because we have new lamination line anyways in place which has got capacity. So now we are utilizing PPF for PPF purpose only. So that's why the numbers are looking like that. So, but again, the full capacity, as you rightly mentioned, you can take 300 crores, and these kind of numbers, we have a target to fully utilize the line by end of this financial year.
See, if you look at PPF, previous year to current year, the growth has been 300% in volume terms, and so the growth is huge, and we believe that this full utilization of capacity we are targeting now. There are other market factors also we need to look at, but this growth, increase in volume growth is something which we are working on.
Right, sir. That's quite understandable. So definitely we were getting good margins when we were making sun control films out of our PPF line. So my second question would be, so regarding PPF and sun control films, so do we have any deals or tie-ups with car manufacturers itself that we sell these films right when the car is purchased from a dealer, or all of these have to be purchased by the customer after they purchase the car?
See, we have arrangements with two manufacturers already, and there are more discussions on to have that. At the same time, we have around 100 dealerships who buy directly from us. So there are two things. One is car manufacturing company directly asking for this product. So we have two such companies already, and there are more in discussion. And other than that, we have 100 of dealers where we directly supply the material. So that is another way. And we have a target we have shown in the presentation to reach that kind of number to 500. And of course, the maximum number of manufacturers, we will try to go direct with them. So, it's both. Yeah.
Yeah. So these tie-ups, are these exclusively for India or exclusively for US or something like that?
So no, I'm talking as of now for India. For US market, yes, there are, in fact, for sun control also or PPF also, there are distributors and there are some customers who have directly tied up with the manufacturers there. Because in India, we are doing everything to increase the volumes and all. In US, we have a very strong presence by our distributors who are local people there, and they have got good connect. So in that market, they are doing the tie-ups, and we are directly supplying from here. Here means from global in USA. So the answer holds true for both of them. But in India, the Garware directly doing all those things. In USA, the distributors are doing that.
Thank you. Naitik, I'll request you to join the queue again for a follow-up question. Next question is from the line of Shubham Agarwal from Equirus Investments. Please go ahead.
Yeah, thank you for the opportunity. Sir, I had one question regarding the margin. So if we observe the last 10-12 quarters, our EBITDA margin has been kind of going down significantly from almost 27% to now 15%. Now, given that we are into specialty and we expect the margin to remain slightly stable, so what is the reason for such a massive fall, and how do we expect the margin to, or what is the level at we expect the margin to stabilize?
Shubham, see, we need to look at two segments separately. One is in relation to CPD products. Margins are stable. In fact, we are able to do as well as we have been doing earlier. Now, there are certain commodity products which we do sell. Earlier, it will around 20-odd%. The margins do come down at that particular segment. Last quarter was not that good. Maybe last whole year was not that good.
Okay.
So the average has come down primarily because of this particular aspect. Anyway, that's not something which we are focusing on, because our idea is to increase value, volume and value vis-a-vis value-add product. So as it goes up, and the percentage will stabilize. So coming down, So this, Deepak, maybe you can add.
Yeah. So again, as Hari explained, so that 20% which margins were rock bottom, but we assume that has reached to its lowest possible, and the only sign from there is it can go slightly up. But our focus is not that. Again, our focus is to PPF and Sun Control, which we see value, and there these margins will be stable and the volumes will pick up. So overall average EBITDA margin should increase going forward.
Okay, and any tentative, sorry?
Yeah. I'm saying stable to strong.
Okay, no, but the margin at what level should it stabilize? Like any number that you have in mind?
See, couple of factors we need to look at dynamically. We can say that current levels is a good number to look at from a extrapolation perspective. But we are also looking at what you call PPF growth. So PPF growth, luckily PPF as well as Sun Control, we are at a similar level. Shrink margins may vary. So overall current levels you can consider as a stable number. Now, unless the market forces change dramatically on IPD or something, current levels should hold good. A PPF also we will be able to hold good. I think broadly it looks like these numbers we can, like this can be managed.
Yes, offhand we can't calculate right now, but the thought process is more volumes of specialty, and then percentage of commodities is already very low. It will go further down to making that EBITDA percentage stable or better.
Understood. Fair enough. Sir, and lastly, one second question on this PPF. So what is the total capex required for adding a new line if we decide to do that?
So see, most of the infrastructure has been completed. We need to just acquire the equipment. Now, currently we believe whatever was the number which we had spent out last year, about 30-40% was for the infrastructure that we did not do it again. So we will the capex of say 100 crore.
Okay.
Around that level. We don't, of course, put a cow out. We don't have any agreement. We have not signed any papers with the supplier, etc. So, but this looks to be a rough number which we can think about.
Got it. So this will basically on 100 crores, we can almost double our revenue potential, which is currently 300 to 600, if I assume correctly, right?
Correct.
Okay. And is this the same case with the Sun Control film?
Sun Control
investment is little
higher because the basics remain same. The infrastructure has already been put for the new Sun Control line also. We need to only acquire the equipment. Of course, the value of equipment it is on a higher side.
Because it's just we have commissioned the line 4-5 months back, so that will take little longer to think in that process. But on PPF, we will be working fast and reviewing the numbers.
Perfect. Thank you. That's helpful.
Thank you.
Thank you. Next question is from the line of Keshav Garg from Counter Cyclical. Please go ahead.
Sir, I just wanted to understand one thing. Sir, our EBITDA last year was 230 crore and our sister concern Garware Technical Fibers, their EBITDA was also 230 crore. So both companies are debt free. So how come their market capitalization is almost 4 times our company?
Both are into different segments. Keshav, no, see, we don't want to comment on the market cap or share price. I think we will rather focus on selling PPF and Sun Control and then be happy with that. Now, of course, markets look at variously. In fact, one of the complaints have been we have not even had a call for last 1 year. So there are multiple smaller factors, and many people have clubbed us with the commodity market. Now, if you talk to many people, the investors, they were thinking us as more like a commodity player, not as a, though we have been telling earlier also, it's not first time we have been saying all these things, but that's the scenario. But so we, anyway, from a market cap perspective or share price perspective, we would not get into that kind of thought process. Let us complete the process of selling as much Sun Control and PPF as possible.
Yeah. So again, I'm just complimenting what Hari said, that the company, once again, it's a R&D driven, new product development, high quality, consistency, having 90 plus countries exports. So our focus will remain there to fill the line of PPF fully used, then Sun Control fully used, then think of further expansions and all. So all those things will be in our mind. And again, we are a company which makes product which nobody makes in India. So our peers and there is no comparison. So we will set the tone like that. We will do our work and let market to its own course of actions.
So the thing is that Garware Technical Fiber has done 5 share buybacks, whereas sir, we are just sitting on 250 crore of net cash. We have over 200 crore of operating cash flow every year, which is more than sufficient for any capex that might come in future. But sir, still neither is dividend going up, nor is there any share buyback. So there is a limit to how much you can talk up your stock. So thank you.
Firstly, we don't want to talk up our stock for sure. See, the cash will be required in our humble opinion, maybe in near term. Of course, expansion is something which we are looking at. See, we have to build the whole infrastructure. We need to only buy the equipment to double our capacity for PPF and not exactly double, but at least 30-40% increase in the whole Sun Control area space. So it's something which, and if we can do without debt, why not do it? So the cash is something which is required. Anyway, having said that, the cash is not something, we will have more cash because we may at some point of time selling our Nashik land, we will do something with that. So the cash will come up. Idea is to build a good balance sheet, get good technologies. Maybe if we get some good technologies to acquire, we will do that. We don't know. See, currently a lot of things are uncertain. We don't want to comment on future course of action. Immediate 1 year goal, maybe 1.5 year goal, fill up the capacity, existing capacity which we have. And surely, as we reach the capacity utilization, as we are able to foresee a position where we are able to for capacity, we will surely use the existing cash to build new lines, because all those things take time. You give money, it takes time. So it will. So all these monies are required. It's not like we broadly do believe the money will be issued, but if we think otherwise, of course we will come back.
And just to add on Hari's thing, when he said that we have built, so this new line, we have made replica of the building. I mean, the building can accommodate 2 lines. I mean, one has been operational, another thing is fully ready with all the utilities, building, everything is ready. We just have to put the equipment whenever needed. So we know that the market is going in the right direction. So we will utilize our cash into that area.
Sure, sir. Sir, now the apprehension is not the cash. Cash will surely increase on the balance sheet, but whether that cash will reach the shareholders, that is the main apprehension. So anyway, you have addressed that question. So now the second thing is that we are trying
for shareholders. See, Keshav, let us set it right. Cash is for shareholders, so there is no question. There is no how will we use the cash. Cash is purely for using for we have kept it primarily for expansion purposes, no other purpose.
Thing is, we are trying to sell our PPF in the domestic market under the name of Garware Application Studio. Now, sir, the point is that nobody will put PPF in a Maruti or Mahindra car. They will put in a imported brand, BMW, Mercedes, and so on. Sir, so now, if someone is buying a foreign branded car of, let's say, 50 lakhs or 1 crore or above, so they will go for 3M, which is a foreign brand, and their main pitch is that we are a foreign brand. And whereas we are trying to sell it under Garware Application Studio, So why aren't we trying to sell it under global film brand?
No, see, Keshav, primarily we are targeting as much as export as we can. So last year, just to give a rough estimate, 70% of our PPF was used by USA. So it's that much which we have sold in US market. So we are talking of 30, 40, 50% utilization going forward in India. And Garware is a brand which is very strong brand. It's 3M is not even what you call manufacturer of their own product. We don't want to talk down any other thing, but broadly, we believe our manufacturing capacity, we believe in our product capacity, and we will grow on that basis.
Yeah, I will tell you the numbers, like we keep track of this thing. As I said, if we compare 2 years back, India's sale is now 10 times of PPF we are selling in India market. That's number one. Second is not true that people do not put on low end. I won't say, I won't name Maruti and all, but the highest sellings are, this Harriers and Scorpio and XUVs and all. So we have all the records and everything, and we are seeing the growth is going on all those segments, right? So, and second thing is, whenever we go to the market, we have a very strong survey of the market. Our team is on the ground, and we do surveys as anonymous, as a third person, and we understand that Garware brand is quite strong on sun control, and now same kind of perception on PPF also. So we are doing really good on that. And these are data-proven scientific research which we have to support our arguments.
Ladies and gentlemen, due to time constraint, we'll take that as the last question. I now hand the conference over to the management for closing comments.
I would like to express our sincere gratitude to all the participants for joining us today and contributing to this engaging discussion. Your presence and insightful questions have been valuable to us. We remain committed to pursuing our business strategies and overcoming obstacles with determination. We are grateful for your continued support and trust in our company. Should you have any further question or require additional information, please do not hesitate to reach out to us or our IR team at Ernst & Young LLP. On behalf of the management, we once again extend our heartfelt thanks for your time and participation. Take care. Goodbye. Thank you.
Thank you very much. On behalf of Garware High-Tech Films Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.